Good afternoon. Welcome everyone to this Investec budget breakdown live from Johannesburg. My name is Justice Malala. We've all been following events over the past few days. Finance Minister Malusi Gigaba presented his first budget, and some who are a little bit naughtier than I am say we'll see whether it's his last. So that should be interesting and something to look forward to discussing with my panel. But he slashed spending, hiked rates, and the big question is, has this done enough to bring back confidence into the system? Will this fix public finances, and so forth and so forth? So today I'm joined by three esteemed colleagues from here at Investec. Ronelle Hutchinson, who's a portfolio manager here. Annabel Bishop, well known to all of us, the chief economist, and David Gracey, who is the head of currency and derivatives here at Investec. Guys, can I start with you, David? One of the things for me, coming from a political perspective, was that the past 2 months have been full of kumbaya, if you will. You know, many of us saying, "Oh, Cyril Ramaphosa's in." There's been an impact on the rand, on the confidence is looking slightly up. So I went into this budget wanting to see if that can be sustained. Has it been sustained from what you saw yesterday? Can it be sustained? Was it a good budget?
Justice, my view is that this budget, unfortunately, because of what's happened over the last 10 years, is a budget that looks backwards as opposed to forwards. And when I say it looks backwards, it's trying to fix the ills of the past. And we're trying to be a progressive society, uplifting the poor, alleviating poverty, creating jobs. This budget doesn't do any of that at the moment, but I think it was unavoidable given the state of national finances. So in a short answer to your question, I don't think so. That's going to take very long because we've taken 10 years to get here.
Oh, let me have a fight with you. The rand yesterday seemed to get a big cheer from what he said. All around, I look at the commentary, people say, no, this is not bad under the circumstances. And so it's a positive. Isn't that a fact?
It's a relative game. If we go back 10 years, maybe a little bit more, our budget deficit was closer to 30% than it is now. We're now closer to 60%. That's why I say it's going to take a long, long time to fix the problems of the last 10 years. Markets are cheered, because it was a bit of a relief rally. I think markets are saying it's not as bad as it could have been. VAT was touted perhaps to be hiked by 2 percentage points. It's only 1 percentage point. They haven't touched personal tax. They've cut back on spending. And it's a little bit more positive than last year's medium-term budget speech that the minister tabled all our ills. So from that perspective, the market has reacted positively.
Annabel, I can see you champing at the bit. You've written a lot about confidence. Is it back in?
Look, I think maybe if we take a little bit of a step back to the start of this year or late December, when we saw Cyril Ramaphosa come in as president of the ANC, that's when we saw a huge rally in the rand. You know, the rand gained about 2 rand to the US dollar, and that's really a risk premium that came out of the currency. You know, before that, if you look in 2015-16, the rand jumped by about 2 rand, depreciated by about 2 rand to the dollar on Nenegate. So, you know, rolling back that risk premium has been quite important. Since then, the gains that have been made have been much smaller in the currency. And of course, yesterday, the rand gaining about 10 cents against the US dollar, not a big move on the day, but really it's rather been momentum that's been created since the end of December. You know, Cyril Ramaphosa coming in as president, that obviously caused the currency to go through 11.70, and obviously now there's a possibility we could be looking forward, moving towards 11.50, even 11, if this positive momentum that you're alluding to carries on, this rise in confidence. And of course that could come about possibly through changes in the cabinet, changes in key government ministers, in even looking at state-owned entities and key institutions. You know, there's going to be a review of SARS now, the budget announcement. All of those are very important factors to keep this momentum going. But yes, if you look at the metrics, business confidence for January shown an increase, the SACI figures, and likely this will be the case in February, March. Certainly the BR, big confidence reading at the end of this quarter, is likely to show a rise as well. But that's all from the political momentum. We haven't actually seen anything translate through into economic gains yet. And as a consequence, the economic growth outlook is expected to be brighter, but we haven't actually seen anything come through yet. It's still too early in the day.
Well, now let me ask you about the impact on markets, particularly bonds and equities. What's your take?
I think if you look at the market response yesterday, bonds on the R186 rallied down to under 8%. The rand strengthened, albeit marginally, as Annabel highlights. And equity markets ended up 1% up after being in negative territory during the course of the day. So if you look at that response, I think net, a positive outcome on the budget. And I generally think consumer and business confidence will actually improve on the back of that.
Let me go back to something. One of the elephants in the room, as it were, is the ratings agencies, and Moody's in particular. Annabel, what would you say, walking out of that chamber yesterday, Malusi Gigaba, has he done enough? Do the numbers show that we've got enough to perhaps avoid another downgrade this time?
So I think the budget may, on balance, just be enough to avoid a Moody's credit rating downgrade to sub-investment grade in this quarter. Okay, so they'll give the review before the end of March, certainly. And the reason I say that is if you have a look at the substantial increase, projected increase in debt, borrowings as a percentage of GDP, that rose all the way up to 63% by the end of 2025-26. It's a horrifically high number, and it showed a sharp upwards trajectory. There was no leveling off of debt. There was no reduction in debt. And why that's so important is if you see continued substantial borrowings and you are borrowing to pay off your debt, you fall into a debt trap, which South Africa had done so. Our current balance was negative. That results ultimately in substantial fiscal problems down the line, and that's why we're getting our credit rating downgrades we've been getting so far. So the budget's basically rolled us back to somewhere in between the MTBPS of last year, which is disastrous, I've just outlined, and the budget, the 2017 budget, exactly a year ago, where we saw a lower borrowing trajectory. So possibly enough's been done, but I think when you assess the credit rating agencies' next move, especially Moody's, they look at a number of factors, which also include political certainty or uncertainty, and certainly the uncertainty seemed to have reduced. Then they also, of course, include the economic outlook, and economic growth was expected to be quite poor in South Africa. Remember, we dropped down to 0% in 2016 from about 3% in 2013. Now the expectation is we could rise to 2 to 3%. And of course, the other big issue, the main issue really now for us, are the state-owned entities. What's going to happen with their governance?
Let me ask you, therefore, you mentioned state-owned entities. Some clarity, but not total clarity. Land is a big issue that many people are talking about. When you consider certainty or uncertainty in the market, it seems to me that we have quite a few bits. Nuclear was not mentioned at all, that we still have a few areas of uncertainty.
I think the last few weeks regarding the nuclear question, I think that is off the table since President Zuma's resignation. We've had a number of comments, and there's
Minister Mahlobo just 1 week ago said, we're going for it, but
there's no money for nuclear. Let's just make that clear, and I think the tone is changing a little bit. As far as state-owned entities are concerned, the assumption in the budget is that there's no more bailouts for state-owned entities. I'm not certain that that's achievable. I think the state-owned entities are in such a bad space that it's going to take a very long time to sort out. Yes, there's changes to the board and changes to the executives of these various entities. Eskom is a big problem. The finance minister himself has alluded to the fact that that's a disaster zone waiting to happen. He did say yesterday that any action on state-owned entities, any new funding or bailouts that are required will be budget neutral. And the hope there is that they can sell some non-core assets to fund any bailouts. I think that is the one risk factor, that assumptions were made in the budget that they won't have to fund new bailouts. I'm not sure that that's achievable in the shorter term, Justice.
Annabel?
Look, I'm fairly worried about the state-owned entities because, as I said earlier, it's the one issue that hasn't really gone away very much at all. Nothing's really been done. Sure, we've had change of board at Eskom, the change of governance, a lot of work being done there to try and sort that out. Certainly, in terms of the other state-owned entities, they need improved governance as well. But, a lot of them the big issue comes down to, is it a going concern or not, and who's going to fund it? And of course, that is important when you go to the debt markets, when you try and raise the money, because as Minister Gagaba said, you need to obviously be able to have these SOEs being self-funding. They cannot actually be a drag on government. We forget that we've come from a period in the 2000s where we've actually had high economic growth, fiscal consolidation, and we've obviously had well-performing state-owned entities, and they have actually managed to produce a profit. There haven't been a millstone around government's neck. We've actually got an upgrade in our credit ratings to an A-grade credit rating in the 2000s at a time when unemployment fell all the way down to 22%. So we've actually been taught in the last decade that we can't have that. We've been taught that, you can't actually have infrastructure spend without having a deterioration in government finances and your state-owned entities blowing up and losing your credit ratings. And we've all come to think about life very differently. So returning to those 2000s of good growth years, it is achievable to sort out our state-owned entities. But the question really is, are the hard decisions going to be made that is required to do this?
Can I just come in there, if I may, Justice? I think something that's happening that perhaps is at a political level a little bit unthinkable for many in the government structures is that because of the dismal state of the government finances, whether it's at SOE level, whether it's the national fiscus, whichever way you look at it, government is now being forced to look at partial privatization. The president himself alluded to that.
No one mentions the P word.
It's a hybrid.
The president,
hybrid.
the president did. Minority stakes, I think, is the word that he used. Now, you can solve some of the problems by doing that. Whether it's politically astute at this point to do that, or whether it's going to be acceptable for the larger portion of the population, given the political stance that we have in South Africa, that remains to be seen. But what happens is, when your finances are in such a precarious state and you can't borrow and you can't fund, you have to sell off these assets. And history tells us that in various countries where people have done this and you sell off particularly non-core assets, it actually does you a great service in the future. And maybe, an unpopular example will be the UK in the 80s, late 70s, 80s, under Margaret Thatcher, but they were forced to do that because their fiscus was also decrepit as it was. So it's something that I think we need to watch for if we're going to sort out SOEs in the shorter to medium term.
Ronelle, one of the things that struck out at me was that National Treasury said it will increase, I think, about 5 percentage points, the prudential limits on offshore investments by institutional investors. Will there be a big outflow because of this? What does it mean?
I think it's a positive development because if you look at the extensive research that's been done on the optimal asset allocation that a South African investor needs to have in terms of offshore, that's been at 30%. So moving the prudential investment guidelines from 25% to 30% now allows the South African investor to be at that optimal offshore allocation. I think obviously the strong rand is a positive now in terms of taking assets offshore. But if you look at most South African investors, the big move has largely been done. So I think the impact now in terms of outflows should be more marginal, basically. But I think, overall it's a positive. You have a stronger rand, you have greater capacity to go offshore. So for the South African investor, it is definitely a welcome development.
One of the things for me that stood out was the balancing act on tax, both corporate income, personal income, and then VAT, which has been spoken about again and again and again. Union and trade union and the left very unhappy this morning, saying how could this happen and so forth. Is there a political risk there, and what does it mean that the obvious whipping ball, the corporates didn't get taxed higher? What happened there?
Look, I think if you actually have a look at where South Africa sits from a corporate tax point of view compared to globally, you'll see we actually sit at a very high rate. 28% is actually very high internationally. And if you look at it as a percentage share of GDP, again, we're above both OECD countries and indeed the rest of Africa. So hiking corporate taxes was never going to be a good thing from that perspective, because it would just decrease our global competitiveness. And of course, obviously, it has a negative impact on corporate sector activity and in turn on employment. So the Davis Tax Commission has looked at this quite significantly when they look at the spread or the different ways to tax. And of course, the big issue that they have is that the more you tax on the corporate front, the lower you actually end up with in terms of economic growth and employment. So it's a big issue for us, because we really need to have substantially higher employment in South Africa. And I think, shifting it onto VAT, well, VAT is very low from an international standard. So what they've done is they've presented a budget which is correct internationally. But whether it's going to be correct for our politics is something we're going to see down the line.
David?
Yeah, I agree. I definitely agree with Annabel. The world is a very fast-moving place, and money moves very quickly, and it goes to the most efficient usage. So, politically, it might be a model that says, well, the corporate tax rate is 28%. Let's raise it to even 35%. That will have a direct impact on growth, direct impact on employment or unemployment, and I think it's a very difficult thing to do in the global economy that we live in. Money moves very, very quickly, and that's something that I think sometimes the politicians miss. They're very insular when they look at the situation in our country, or any country for that matter, not just peculiar to South Africa, is that they fail to recognize that the globalization and the speed of setting up business or moving businesses has a direct impact, and it has a direct impact very quickly.
You've spoken a lot about certainty in the market and confidence and so forth. We have a question here from Mike Cohen, who says, what is the end game for the land issue? Are the politicians saying that land is the panacea for all social ills? Where are they going with this? And it is very possible that land then becomes a commodity, and one that you can only sell once. So the question is, what is the end game for the land issue? I don't know if anyone wants to have a go at that.
I'm going to pass on that question. I'm certainly not smart enough to figure it out.
I've been interested in the land issue because since December, and as a particular event, that in December, the ANC adopted expropriation of land without compensation. And President Ramaphosa has said it January 13 at the ANC celebrations in his State of the Nation speech. But it remains, there are so many caveats in the actual resolution of the ANC that, no impact on any other sector of the economy. There needs to be a proper study. The third one, I think, was food security. And he keeps on repeating these. But is this something that hangs over your work?
I think it does hang over the investment world. Look, I think what's happened at last, it's become front and center of public opinion. And that's a good thing, because I think it has to be resolved. As I said, I'm definitely not smart enough to figure that out. But at least there's a debate about it now. It's not, it won't remain at some political rhetoric or sloganeering, campaign slogan to talk about to garner votes. I think the dialogue is very necessary. I think there are ways that it can be sorted out, and I think the president certainly is conscious of the negative effects of going perhaps a Zimbabwe style. And I think a lot of dialogue will happen around the situation. And like a lot of things that do happen in South Africa, a solution will be found. Whether it's a popular solution or whether it's a good solution or a sustainable solution, as I said, I'm certainly not smart enough to figure that out.
And I think if you have a look at the budget, they've made a lot of allocation for support for black farmers, and I think that's certainly a step in the right direction. Certainly, Cyril Ramaphosa as well has said that we need to have the studies to see what has gone wrong in terms of, changing of land ownership in the past, where farmers have not managed to be successful, black farmers on new land. Of course, these farmers point to issues like lack of irrigation, lack of area, lack of a place to store their products, lack of sufficient water, many different areas. And of course, the budget gives about 100 million a year for this to assist, which is probably not enough. But the bottom line is, I think it's a much more complex issue. Really, just in terms of taking land away from someone, giving it to someone else to farm, and then you worry about will there be enough agriculture, produce and food security. The issue is much deeper than that. I think that the bottom line certainly is a lot of people feel that it has been the cause for economic exclusion for many people in the economy. Black people feel that if they hadn't had the land taken away from them, many of them have said that they would have been in a much better position now financially, economically, and there's this huge loss of opportunity. So I think, certainly what I've thought about this budget and even the very severe reaction to the VAT increase and in many other aspects, it's people shouting at different symptoms of a cause. And the cause is actually something different. The cause is that the majority of the people in South Africa are either unemployed or underemployed in terms of what they would like. The majority of people don't want more social welfare. They want a decent job. They want a decent wage. And I think it all talks back to the same issue. If we can get this economy growing and get a strong, sustainable economy of economic growth of about 5% plus, if we work our unemployment rate down to 22% like we did in the 2000s and keep going down to single digits, we can then get this burden of government finances off our back because we draw a huge number of people into the formal economy. They become taxpayers, and we also get this reduction in the social welfare burden, this huge social wage, and then we actually draw those people into the economy, but there still does need to be some redistribution of assets and land
Annabel,
as well.
we're going back to the very first question that we discussed, and it's whether enough has been done. Have we done enough to put the plaster on the scratch outside, but we're not looking at the entire knee and saying,
you look at the holistic picture.
Yes. I mean, doesn't that mean that optimism and positivity may drain out of the system?
It could flag as we move through the year, move into next year, if we don't actually have a sufficient momentum, certainly in foreign direct investment.
I think, Justice, I would add the perspective that the change in leadership has really ushered in a new positive story for South Africa. And I think it's one shifting us away from stagnation and state capture to more consumer investor confidence and higher potential growth. And I think that, for me, is key. There's goodwill, there's positive sentiment, and we need to take advantage of that in the current environment.
Look, I think we are in the midst of a Ramaphosa rally. That's what's being termed at the moment. And recent action since the beginning of January suggests that at least the president is beginning to get his hands dirty. We had this disastrous attack on a police station in the Eastern Cape yesterday. 5 people lost their lives. I mean, it's an absolute atrocity. And the president gave the police minister 72 hours to find the culprits. That's a new kind of energy that's coming in, and we're seeing it across the space. We're seeing new boards in SOEs. It is important that this positive momentum continues, because the foundation here is not very strong, and we need to start propping up and making sure that we attend to the foundation. So we need to continue this positive momentum, this new dawn, as the president calls it, to ensure, not only for financial markets, not to make sure that the rand is strong or that the interest rates don't go up, or those are symptoms of what's happening in the broader economy, but that we can alleviate poverty, that we can create some jobs, that we can begin to meaningfully impact people's lives.
Ronelle, a question for you from one of our viewers. Surely the increase in the allowable offshore allocation for retirement funding from 25 to 30, coupled with the current relatively strong rand, will result in fairly rapid offshoring of retirement savings in South Africa, with a consequent negative impact on the local indexes.
I think if you look at the global backdrop at the moment, it's largely positive for emerging markets. And South Africa definitely participate and will participate in that. If you look at 2017, South Africa did not capture a lot of the emerging market portfolio flow. In fact, from an equity perspective, I think we went negative. So in the current environment, when you take into the positive global backdrop, specifically for emerging markets, it's very difficult to call that there's going to be an immediate rush to go offshore, because the current environment favors emerging markets and South Africa always participates. And therefore there is, in the current environment, a bias to strengthening from a currency perspective and favoring emerging markets if you look at from a global investor perspective. So It's difficult to call. It's a tough balancing act at the moment. But I think in the short term, there might just be a bias to continued strength for the South African currency.
Another question from one of the viewers. What is the impact on businesses of the VAT increase? And what are the expected effects of the tax increases on CPR? I don't know if you want to.
I think I'm going to leave that to Annabel if I can. She's got these figures all at her fingertips.
So look, I think maybe starting with CPI inflation, bear in mind that I suppose the expectation was it could come out about 4.7% this year. And then we had a very low figure for January, very modest CPI inflation outcome, about 4.4%. Being at the start of the year, it pulls the index down for the whole year. And inflation was then broadly expected to come out at 4.5%. But of course, the same day we got the budget with the VAT increases. And, that could add about 0.5, 0.6 to inflation. So we're back at around about 5% again for CPI inflation. I think that's quite key because, that really indicates to us that, CPI inflation is unlikely to drop much below the 5% mark over the medium term for the Reserve Bank's inflation targeting policies. And it really indicates as well the Reserve Bank's probably not going to rush into any tough interest rate cuts. They typically are quite hawkish. And what this really means is that they're unlikely to cut interest rates too quickly, whereas they have historically hiked interest rates quite quickly under Lesetja Kanyanga. So that's where we're sitting at the moment with inflation and interest rates. We're looking for really a flat outlook with the possibility of a cut, down the line. Certainly in terms of VAT and businesses, in terms of the consumer, if you look at South Africa's consumer, and even if you look at the tax statistics, it's quite interesting to see that the bulk of tax, 70% of personal income tax, comes from 2 million people in South Africa out of 7.5 million people. And that really shows you the income spread as well. And, certainly for VAT, it's a regressive tax. So it means that people who earn a small amount of money tend as a proportion of their income to pay more VAT than people who earn a larger income because they're going to be spending less on commodities with the VAT. They've tried to balance this with the ad valorem tax, which is on luxury goods. And obviously there has been tax increases for wealthy individuals in South Africa, even though a lot of people have actually not seen that. And that's, of course, the lack of relief for bracket creep. And that's brought in a substantial amount as well. So the bottom line for businesses, it will take off growth. And we were looking at GDP growth rate of possibly 1.5% this year. It might come closer to 1.4%. So it's going to have a negative impact. But I don't think it's going to quell the economic outlook and cause growth to drop down substantially. It's a small increase, that has, on a global perspective, brought us slightly up towards the average, but still well below it. And historically, we haven't had any increase in VAT since 1993.
When the minister said 1.5% GDP forecast yesterday, I felt like we're still in the losing zone. What should we be doing to lift that to 2?
And to go to 5 to 7% growth. I think that's the key point. And, interactions with international investors have really told us that they're waiting for bigger changes. That there have been changes and they're interested, but they want to see a few more changes. And particularly a cabinet reshuffle, putting the right people in place in the cabinet will actually send a very strong message to garner in this fixed investment. The question you're asking is, what do we need to do to lift our growth rate further? And, of course, last year we saw growth rising above 2%, but that was back on the back of the drought-led recovery. It was on the back of the lift in the mining sector. Going forwards now, we need to see this quite arguably strong lift in business confidence translate through into a strong rise in investment, whether it's domestic companies who are investing in South Africa directly, building capacity, building the number of factories, reindustrializing South Africa, whether it's foreign direct investment coming to South Africa. That justice will provide the momentum and the turn wheel to really get our economy going and move us up to stronger economic growth. So this 1.5% growth could well be a misnomer that's expected for this year because we haven't actually seen that translated through into actual economic activity. But then, of course, we haven't seen what many people are longing for, the cabinet reshuffle, the repair of SARS, the repair of governance and the SOEs. The SOEs still remain a big threat to our government finances. And if we do get a credit rating downgrade from Moody's this quarter, it probably will mainly be because of the SOEs.
I think it's indicative of how far we've fallen behind when some people are celebrating a 1.5% GDP forecast. You know, we've sadly missed out on a decade, Justice, of activity. We missed the entire commodity boom.
Why did we miss out?
Well, investor confidence for one, policy uncertainty for another, for the second factor. There are many different factors. Whether we can delve into the technicalities of the labor market and the insecurity of the labor force and strike action, but policy insecurity, I think we can bracket it and say policy uncertainty, sorry, not insecurity, and lack of coherent policy. You know, I think you and I spoke some months ago, and we spoke about various examples globally that you can look at where you get positive growth by doing some really clever stuff, and you get negative growth by doing some crazy stuff, whether it's Venezuela or Zimbabwe or on the other side of the spectrum, Korea or Singapore, or whatever it might be. We've missed out on an entire decade. Right now, the global picture is quite healthy as far as growth is concerned. Europe is picking up. The US is forging ahead. Asia's doing very, very well. We're languishing at around 1%, and we get excited at 1.5%. 1.5% does nothing for us. We're farming backwards. Our population growth is higher than that. We need to get back to, Annabel talks about the early 2000s, the 5% growth rate, 6% growth rates. That only then do we have a meaningful impact on government finances, on unemployment, on poverty alleviation, all of these things. And it's policy certainty and policy clarity that might get us there.
Ronelle, there's
Business-friendly policies.
Business-friendly, yes.
Ronelle, there's a question here for you. It says, how much portfolio flows for equities can still be allocated to South Africa? Any guesses? Is the world really underweight South Africa?
I think if you look at emerging market equities from a South African perspective, there is potential for inflows into the local equity market. That's really an attractive, with all the positive developments, that's an area where you can potentially see re-rating. The other point I'd like to highlight is that the real yield on the bond market in South Africa is very attractive for the global investor. It's 4% round about there. And that's very attractive. The US is giving you a real yield of close to 1%. So when you look at that from a global perspective, South Africa remains attractive both on the bond market and on the equity market. So you can still see some additional flows coming through, I believe.
I agree as well. I think we actually could see significant further investment this year because foreigners, I think, like our turnaround in our story. And I think as I said, we could see a significant brightening in the economic growth outlook, and that in turn would be very positive. And of course, the expectation that we could also move to an interest rate cutting cycle.
There's another question, and it's for all of you. What is the panel's view on the trajectory of the rand exchange rate, looking at the possibility of expropriation of assets without compensation? He says assets, not land. Do they see the expropriation ending with land only? I don't know if you have any questions.
I don't have a view on the last part of that question, whether it ends at land only. I guess land is the hot potato that we're going to have to deal with, and we can't wait another 10 years. We have to deal with it one way or another. The trajectory for the rand right now, we're still in the midst of the Ramaphosa rally. We technically, and I don't want to use technical terms, but we're in this recent trading band of 1150, 1180. If we get a cabinet reshuffle and importantly, I think, Justice, a downsizing of the cabinet, that will send very positive signals. And if the global backdrop remains what it is, we could very well see the rand targeting below 1150 towards 11. We must understand that for many years now, the rand has been fundamentally undervalued, with all these political risks and all the stuff that was going on for the last 5 years, finance ministers being fired or offered bribes or whatever it might be, or removed, or however we want to describe it. That risk premium has decreased. You could argue now that the rand probably is at fair value. It's moved back to its average level. But if we see some more action around cabinet reshuffle, and if we see some more action from the legal authorities, from the police, around taking care of some of the theft that has taken place over the last 5 years, then we'll get more positive sentiment as far as the currency is concerned.
Annabel, you want to come in there? Yeah?
I can, yes. Look, I think I agree with what you're saying, that certainly, however, if you look at the budget, the focus is on land expropriation. It hasn't been on all assets. That was a feature that was trying to come through under the Zuma presidency. The expropriation bill was trying to look at all assets. But I think, rolling that back now under a Cyril Ramaphosa presidency, I think those types of grabbing attitudes will start to diminish if we run into a period of very strong economic growth. Under Thabo Mbeki, the 2000s we were talking about earlier, from 2000 to 2008, when we saw economic growth go from about 2% to 5% and 7% over that period, a lot of those concerns died down somewhat as people found themselves increasingly in employment. And we're not saying that they were eradicated and disappeared, but I'm just saying that, people just want to be able to make a good living for themselves. And owning your own land means that you can obviously raise capital on it and then obviously use that for business and obviously improve your lifestyle and become in a better position financially. So I think that's what people are really after. I think, they're looking for some type of sustainable way to improve the future and for their livelihoods, as well as redress for past inequalities. And that's really where we're sitting in South Africa at the moment. So clearly, given the conversation, not much enough is perceived to have been done to redress these past inequalities. And that's where I think we'll be looking to Cyril Ramaphosa with his key, strategic skills and obviously with his high intelligence levels to see what can he actually bring about to try and address these severe problems. Because I think it's just it's wider than just land and expropriation.
A question here from one of our viewers. Even if we sort out state-owned enterprises, reduce corruption across government and avoid downgrades, is the biggest risk facing South Africa macro environment in 2018 the rising yields and inflation expectations in developed nations such as Europe and the US?
I think that's an important point because even though the SA dynamic has improved, the global environment is shifting. There's a move now from the Fed to raise interest rates and to taper QE. And that change in liquidity dynamic is a risk for South Africa. So it's a valid point, and it's one we have to watch. But I think if you look at the Fed, they are adopting more gradual, more cautious approach to doing this. But it's definitely a risk in 2018.
Yeah, I agree with Ronelle. It's very definitely a risk. The question is whether the US business cycle is mature now, and we're going to get a slowdown on unemployment decreasing. Whether inflation picks up in the US, that's the big driver. Where the inflation sustainably gets above 2%, then the Fed will be forced to raise interest rates at a quicker pace. The Fed's bullard, in fact, came out just before this broadcast and was a little bit more dovish in terms of the outlook for US rates. So we have to watch US inflation. A sustained pickup above 2% will mean a quicker trajectory. It's very definitely a risk. I think one of the risks that certainly that I'm looking at, and it's a global risk, and I don't know how it gets dealt with or fixed, but just like South Africa's got a massive debt problem, basically the rest of the world has got a huge debt problem. It's getting bigger and bigger in the US, bigger and bigger in Europe, Asia. Japan is if Japan was rated like South Africa was rated, arguably they'd be, I don't know what, junk status minus something. Because their debt to GDP ratios are about 4 times what South Africa's are. So debt is a massive, massive challenge that nobody at the moment's got the answer to. And if we have an economic downturn globally, that debt is going to create serious problems as far as asset classes are concerned.
And then just to maybe bring that back to South Africa, when you go into this risk-off environment that Dave is describing, that's when your currency sees very substantial weakness. And of course, we were talking about the US interest rate trajectory as well. If they hike by more than expected, again, substantial currency weakness. And it doesn't take much to turn the sentiment in South Africa. And a sustained period of rand weakness could actually quell quite a lot of this positive Ramaphosa effect that we've actually seen recently. I'd also add to the conversation as well that, when you look at these high yields in the US, I think certainly, the growth is expected in the Eurozone to outperform. The Eurozone economy is expected to do particularly well. And there's concerns that the US dollar will resume a long-term weakening trend. So I think there's many factors that go into the mix. That obviously would then be seen as supportive for the rand against the dollar if the US dollar persists in its decline. But I think, basically the bottom line is that we've had a fairly good period of risk on globally, of global investors buying risky assets, whether they're equities, emerging market assets. And these periods don't last forever. And there is a possibility that, as we know, we start to move into a more inflationary environment, we actually see the currency lose some of its shine, and we actually tend to stabilize. So I think the Ramaphosa win, the rally, has come at the right time in terms of global market dynamics, but we can just as easily go back into a risk-off period where the rand can move back to 13 and beyond.
I've got a few questions here from the viewers, and all of them refer to, I think, in the note you wrote, Annabel, overnight, the next event that we're looking out for. We've had the ANC conference, a very positive outcome for markets. We've had Cyril Ramaphosa ascending to the presidency of the country. Many people didn't expect that to happen so soon, and yet it happened, and we've had a fairly benign transition to his first week in office, and many people are now asking about a cabinet reshuffle. One of the questions says, who's the next finance minister? I won't put you on the spot about that, but can I get a sense from the panel, what are you looking for in the finance minister? What are the signs that will say to you, yes, the next layer or the next block in this rally that you refer to has been put in place? Ronelle, shall I start?
I think, the commitment to fiscal consolidation and managing the debt levels and maintaining and implementing these expenditure cuts that they've outlined. So that would be pretty much key. But I think another interesting point is how the Reserve Bank responds to all these positive developments and whether they too will join and cut interest rates and foster growth in the local economy. So I think that's also something I would consider as an important signal moving forward.
So I will put a name forwards, and I'll put Nhlanhla Nene forwards. I think that he actually would be a very wise choice. He's extremely well respected internationally. And of course, some people obviously look at Pravin Gordhan, but I think the bottom line is he's probably needed to sort out the state-owned entities. And I think when we do, at some point, I think we will see a cabinet reshuffle. We're also going to see a reduction in the number of ministries. I think some of them are going to be combined. For example, mining and energy might come back and become one industry again. So from that perspective, what we'll be looking for from a finance minister certainly is someone who can get us back onto the path of fiscal consolidation and someone who can reduce expenditure. And sadly, when we actually have a look at what went wrong in the past decade with government finances, where the biggest leakages and inefficiencies in the system came from, certainly was in a lot of the money is allocated for infrastructure spend and these programs, which leaked its way out of the system. You're thinking of another type of leaks here, leaked its way out of the system to corrupt people in the private business sector, the state capture issue. And of course, rolling back in that area and actually getting our finances in good shape before we then forge forward again is actually something which was done in 1994 when we had the new government come in, the ANC came into power, democracy, when we inherited a budget deficit of well over 6%. And now we're seeing the Cyril Ramaphosa government coming, inheriting a budget deficit of over 4% and looking to roll back government finances and consolidate them in the manner that Trevor Manuel did. It's probably something that we might actually have to go through in order to get ourselves back on a firm footing so that we can then move forwards with a stronger situation to fund the areas that we need to do, but most importantly to fund growth initiatives and actually become a stronger growth economy.
It's an interesting name that you throw in the hat there. I've got a name to throw in, Zweli Mkhize. What do you think?
I suppose that Nene might receive a bigger welcome. He's better known and he's internationally known as well. But I think it'll ultimately come down to whoever Cyril Ramaphosa picks. If it's someone who's seen as fairly credible, then the market will probably support them. But I think at this juncture, where we still are on shaky ground, where foreign investors have not yet had an explanation of why we deteriorated in the last 10 years, where the policies have not been reversed that have come through over the last 10 years, they probably want a particularly safe pair of hands, and maybe Nhlanhla Nene would be it.
Yeah, my view at the moment is, the budget has been cast, the die has been cast for the year 2018-19, as far as finance ministry is concerned. So for me, the finance minister, the next finance minister, whoever he or she may be, is perhaps less important than who the SOE minister is going to be. For me, that's the critical part here. This is the one piece of the puzzle that can unravel very quickly and drag the entire country down. So that person's going to have some strong character and be really smart about how they tackle things in state-owned entities. For me, that's the key ministry as we stand right now.
Ronelle, perhaps you could, as you sit at your desk and allocate and reallocate and so forth, when you look at the budget now, what is your view and what are you telling clients about your actions coming out of this budget for the next 6 months? What are the key considerations following this budget?
I think we're definitely more positive on South Africa, specifically domestic equities. So we'd be looking to upweight and increase our domestic equity exposure. Prior to the budget speech, post Cyril Ramaphosa, we had increased our bond exposure, and we've gotten the benefits of that with bonds rallying and the rand coming in. So we wouldn't look to increase bonds given where they are at the moment, but definitely domestic risk assets are looking a lot better. We'd continue to maintain our offshore exposure. As said, the optimal allocation is 30% for a South African investor. And I think with global growth prospects improving and the rand strengthening, it is an opportunity to maintain high offshore levels. And that's pretty much the general view for us right now.
Mm-hmm. Annabel, I read your notes with great interest, and you're always, you have a down case and you allocate, and you have an up case, and the past few years it's all,
very depressing.
Yes. So, what are your thoughts now, given not just the budget, but also the events of the past 2 months since December 20 and the end of the ANC conference?
Sure. So, our scenarios that we work tend to look certainly a couple of years in advance, but up to 5 years in advance. And what I will say, given the events the past few months, the budget, and certainly waiting now for the Moody's commentary, see whether we get the downgrade or not, we're looking to move more towards a type of 50% weighting for our expected case from 34% previously. So, that would seem to be a bit more sensible generally, but I think in the context of the fact that the down case and the expected case were previously very closely weighted. And what that meant was we were always on the cusp of not just falling into a global risk-off situation, but more importantly, of falling into a substantial sub-investment grade credit rating environment of South Africa, where we had even more deteriorated government finances, as we saw in the medium-term budget policy statement for 2017. If that medium-term budget policy statement had become the fact of what all budgets would now be based on going forwards, then we would have had to stay on those terribly low weightings, where the extreme down case of a debt default for South Africa, like the 1985 situation, was actually sitting at 27% in our probabilities. The good news is we've severely downgraded the weightings in our downside analysis. So we're looking at about probably close to about 25% now for the down case versus about 45% for the expected case. And the up case, we're looking for about 12% from a previous 8%. And of course, the extreme down case, we revised down from the 27% to a much lower figure. So things look a lot brighter. We're waiting for Moody's commentary on the budget, we're waiting for Standard & Poor's, we're waiting for Fitch, because those other two rating agencies are equally as important. They've actually dropped us down the sub-investment grade rating tier into the single B category, and the risk was we went into the double B category, and the risk was that we went into the single B category. And that's the big risk. The lower you go down that credit rating ladder, the closer you get to the C grade, the outright junk status that Greece fell into. And these were the real risks that were staring us in the face. As I will continue to say, I don't believe the SOE situation has been sorted out in any measure whatsoever. It's still a risk for us. But the other areas we've seen substantial improvement on, whether it's political uncertainty, the perceptions around that, whether it's on the growth outlook, the budget. So that is the tilt that we've got. We're moving more to the expected case. And hopefully once we get the commentary out from the rating agencies and move through the second quarter and see the plans now put into action, we start to actually tilt towards an up case.
One of my friends in the audience here likes to use the word shenanigans. And every time things seem to be going a bit turbulent in South Africa, he'd say, shenanigans. So I want to know from you, you've spoken about this Ramaphosa rally and so forth, but the shenanigans, are we out of the woods, and what's your outlook given the more considered talk that comes from the top, from Ramaphosa himself and from those around him?
So we're not out of the woods, not by a long way. Pravin Gordhan alluded last year sometime to the fact that probably 100 billion rand, if not more, has disappeared from state coffers. We haven't claimed any of that money back. In fact, we've arrested, I think, 6 people in connection with the 200 million rand dairy farm in the Free State. So we're not anywhere close to out of the woods yet. However, I will say that the recent action, I think the unity certainly is, the perception of unity in the ANC is a lot stronger than it was perhaps 3 months ago. When the Youth League is starting to support the new president and saying positive things about the new president, then you know something's changed. And others as well. So I think the early signs are
And you
certainly...
think it's genuine? It's not political
Who knows? Who knows, Justice? But, to say these things publicly is certainly a change of stance. So I think the early signs are really, really positive. A hell of a lot has to be done, really. There's still a tremendous amount needs to be done. Never mind finding the perpetrators and putting them in jail. Reclaiming the money. Imagine if we could somehow magically find even half of the money that's gone missing. That's going to plug the hole, the deficit that we have. It's a long, long road. It's taken 10 years to get us here. There's no magic wand to fix us. It's going to take hard work. It's going to take policy clarity. But I think we've started on that trajectory, and hopefully there's the political will to see it through.
Ronelle Hutchinson, Annabel Bishop, David Gracey, thanks so much, all of you, for your time. And thanks to our audience and the viewers in their offices and at home. Thanks so much.
Thank you.
Thanks.
Thank you.
That's how we come to the end. Thank you.